Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Brad Smith alongside Madison Mills. Let's get to the three things that you need to know today.
First up, U.S. stock futures, little change this morning as investors anxiously await that Federal Reserve rate decision at 2 p.m. Eastern today. The central bank is expected to hold interest rates steady, but it could offer clues on the outlook for the economy and monetary policy through its quarterly dot plot. Also in focus, any commentary from Fed Chair Powell on economic growth, which could ease investor concern about softening economic data.
Plus, Nvidia shares sticking higher this morning after CEO Jensen Huang took the stage in San Jose to tout a new lineup of chips that he says would provide a clear payoff for customers.
Each one of these phases, each one of these waves opens up new market opportunities for all of us. It brings more and new partners to GTC. As a result, GTC is now jam-packed.
Huang introduced a variety of hardware, software, and services during his speech, though there were no bombshell revelations for investors, and Nvidia shares closed lower after the event. At the event, Huang said that the new Blackwell Ultra processor lineup would arrive in the second half of 2025. It will be followed by a more dramatic upgrade called Vera Rubin in the latter half of 2026.
And sticking with Nvidia and the tech trade, Meta has officially become the last member of the Magnificent Seven to fall into the red this year, recovering a bit this morning, but the stock has erased 26% of that gain for 2025, now down 0.5% for the year. The decline especially notable as it comes in the wake of a historic rally that saw shares gain for an unprecedented 20 straight sessions. New data compiled by Bloomberg showing even tech investors like Cathie Wood are shunning the stock as her ARK Innovation ETF cut its stake in Meta, selling shares for the first time in nearly a year.
Shares of Nvidia, they are on the move this morning to the upside by about 1.3%. CEO Jensen Huang delivered his keynote address at the chipmakers' annual developer conference Tuesday, unveiling new chips and partnerships. Here with his takeaways from the event, tech editor Dan Halley, Yahoo Finance's own, and he was out there listening in to everything Jensen had to say. I imagine that you were sitting on the edge of your foldable chair out there at the SAP Center, Dan.
Yeah, for a little more than 2 hours for the speech, and then maybe a little less than 2 hours for waiting for the speech. So yeah, by the time that foldable chair, I kind of wanted to get rid of it. But it was a big event, obviously, for NVIDIA, as you said earlier, the launch of the Blackwell Ultra, or the announcement of the Blackwell Ultra, and then the debut of Vera Rubin. That's that next generation chip. And then they showed the next generation after Vera Rubin Ultra. The kind of biggest takeaway here, though, came almost at the top of the show with Jensen Huang pointing out that the company is not afraid of DeepSeek. And in fact, it benefits from models like that. Here he is discussing just that.
Well, this last year, this is where almost the entire world got it wrong. The computation requirement, the scaling law of AI is more resilient and, in fact, hyper-accelerated. The amount of computation we need at this point as a result of agentic AI, as a result of reasoning, is easily 100 times more than we thought we needed this time last year.
It's that kind of discussion that really is what NVIDIA is talking about. We kind of got to do a sit down with Jensen afterwards, and he kind of went deeper into that, saying that there will be these massive AI clusters, data centers that can now be powered by 1 million GPUs interconnected, and then they will connect to other million GPU data centers in these gigantic kind of data center clusters that could be potentially visible from space. And so that's just one part of the discussion. There was also a heavy emphasis on what's next for NVIDIA, and that involves physical AI. Think humanoid robots, think self-driving cars. Nvidia is pushing heavily into this. Now, they've been invested in the self-driving car space for some time. They had an announcement with GM during the keynote. The robotics side, that's something that Nvidia is very interested in. Jensen has said that it would be something that starts off in factories more than anything, specifically because of the guardrails that they can put in place around factories. And then in addition to that, he discussed quantum computing, and that's something that everybody in Silicon Valley has been kind of high up on. There's a number of quantum companies that have gone public, though they're not exactly bringing in huge amounts of revenue by the standard of tech giants. It's still an area that continues to grow as far as research goes. And so that's really where we kind of left off from the event. Obviously, GTC is going until Thursday, so I'll have plenty more news from here.
All right, Dan, thanks so much for breaking down day one for us. Really appreciate it. In his keynote speech, Nvidia CEO Jensen Huang was optimistic about the path forward for AI and the billions earmarked for its build-out.
So in just 1 year, and Blackwell has just started shipping, in just 1 year, you could see the incredible growth in AI infrastructure. Well, that's being reflected in computing across the board. I've said before that I expect data center build-out to reach $1 trillion, and I am fairly certain we're going to reach that very soon.
The announcements, however, initially not met with much enthusiasm from investors. The stock closing nearly 3.5% lower on Tuesday, though recovering a bit in pre-market, up about 1.5%. We've got Pierre Farragut, New Street Research Managing Director, here with us for more. Pierre, great to speak with you. Obviously, Nvidia not impressing investors off the back of day one at GTC. Did Jensen impress you? Were you buying the GTC dip yesterday?
Yes, I think Jensen did a very good job, articulated well the position where AI is today and what the outlook for AI looks like today. And this outlook is changing a lot and very fast and is very uncertain, so that's not an easy job. He highlighted very well that the scaling laws are still present, growing the size of models, growing the amount of compute you put into pre-training, into post-training, into inference, even now, is still very, very, very vivid. And most importantly, he showed how much, his product roadmap is matching that with larger and larger GPUs, an accelerated cadence of new GPUs coming to the market, B300 at the end of the year, and Rubin next year, and the next gigantic flavor of Rubin in 2027. And of course, like the commercial momentum, they have this slide where he shows that the top 4 cloud service providers are going to buy like more than twice, almost 3 times the number of GPUs they bought last year. And GPUs that cost significantly more, that are significantly more powerful, are really a testament of the fact that scaling laws are still present. And so the AI infrastructure market is still growing.
Pierre, I wonder how you're evaluating the stock reaction, though, here over the past few months, especially after some of the all-time highs of the beginning of the year. The company has essentially been in this channel kind of lower. And with that, it's really raised the questions of how long it's going to take for companies, including Nvidia, to grow into these lofty AI valuations.
Yeah, no, it's a very good point. And I think to understand the stock today, you need to go back to the Black Monday, to when the market reacted very negatively to the research DeepSeek published and the new R1 models they released. So on that Monday, these stocks were down in the 20% region because investors got scared by this idea that AI could work with way, way less compute, and that it's like a natural initial reaction to think it's bad for people selling compute. But it took 24 hours to the market to realize that was the wrong way to look at it. The stocks came back very significantly the following day, on the Tuesday. But after that, what happened that these stocks became very weak, got more volatile, and actually drifted down. And to me, in my conversations with investors, what very clearly popped out is the fact that investors started pricing in the fact that being invested into AI is also being invested into the unknown. even if DeepSeek was in the end not a significant piece of news, was a very natural thing to happen in the industry. That what happens at DeepSeek happens actually everywhere else. But investors realized, knowing what AI looks like after 2025 is actually very difficult. What AI is going to look like at the end of the decade, in the next decade, is actually very difficult. It's a very open-ended game. And basically that's a risk that got priced in recently. And that's the reason why the stocks are now very cautious. So while Jensen was reiterating all these principles, all these very healthy fundamentals in the market for him, why, it's even clearer today that 2025 is going to be a very good year, that 2026 is already shaping up as a very, very good year for Nvidia. The reality is that investors are talking about open source and how do players investing in AI infrastructure make money in an open source world. Investors talk about, okay, maybe DeepSeek is not going to mean we need to buy less compute, but DeepSeek means we're not going to be able to make money out of the compute we buy. People are wondering about, okay, maybe 2026, the outlook is getting better, but what about 2027? And so this anxiety is still very present. And that's the reason why the stock, in the absence of any significant breakthrough news, nothing was unexpected, I would say, in what was announced today. The stock kind of sold the news. And you see that today the reaction is a bit more positive. So hopefully sentiment from there is going to improve, because at the end of the day, the news flow at GTC is quite positive. So
yeah, I basically hear you saying, Pierre, that the fundamental story for Nvidia hasn't changed. There was just some pessimism after DeepSeek that we're still trying to get over. I want to switch gears and talk about another stock we're seeing a lot of pessimism around, and that is Tesla, down over 35% year to date so far, recovering a bit this morning. I'm curious, you've got a buy rating on the stock. How long does Elon have before the break that we've seen impacting Tesla and the stock in particular year to date starts to be too far gone and unrecoverable?
Yeah, nothing is ever unrecoverable, right? If Tesla sells billions of robotaxi rides, if not hundreds of billions of robotaxi rides at the end of the decade, and sells humanoid robots, millions of humanoid robots, I'm pretty sure the stock will recover very significantly. I think what's happening today on Tesla is a combination of three things. So the first one is that we've had this amazing progress in FSD technology, and the step up that V13 was, that really convinced investors that the robotaxi opportunity, which is still kind of like a moonshot, got much, much, much closer. Then we got Elon Musk getting involved with President Trump into the election, on the back of the election, and into the inauguration, that initially was perceived very positively. Okay, so these two things took the stock into a very, very, very forward-looking kind of place, where it was trading on 100 times an optimistic earnings number for next year. So the stock was really valuing the 10-year outlook of Tesla very, very significantly. And then suddenly what we realized is that the involvement of Elon Musk in politics becomes actually potentially a negative, because we see orders for cars are plummeting. People are getting upset at him. People are setting Tesla cars on fire. It's not good. It's it's nerve-wracking, as an investor told me last night. And then so that's really what's happening at the moment. And then investors wake up and are like, well, yeah, these humanoid robots and robotaxi opportunity they are still there. They are years out. Right. They are worth a lot. But in the meantime, things don't look that good. And then the third element that gets into the story is that the beginning of the year for Tesla has been very, very bad in terms of orders, especially in Europe. And it's too early to know exactly why. And there is an element of Elon's visibility has a negative impact on demand. There is also an element of the backdrop of consumer demand in the high end for premium product is not good. Yeah. And we know that in the premium car market, January and February can be very, very painful months if consumer confidence is low. Certainly. So we need to get out of that, understand what's going to happen, and then probably the stock will recover And it might take time before it gets back to this last peak, because the last peak was really pricing in many, many years of successful developments on the robotaxi and humanoid robot fronts.
Pierre, we're going to have to leave the conversation there. Thanks so much for taking the time here with us this morning. The other big focus for investors today, the Federal Reserve rate decision and the release of its quarterly summary of economic projections, the SEP. Stock futures holding steady as the central bank is widely expected to keep rates on hold. But commentary from Powell and the update of its dot plot, that will be heavily scrutinized by Wall Street. Joining us for more, we've got Yahoo Finance's Alexandra Canal. Hey, Ali.
Hey, Brad. Yeah, summary of economic projections. It's only released once a quarter, so there's always a ton of anticipation surrounding this because it gives us a clue into what the Fed is thinking. But it feels like this time around, the stakes are even higher considering where we're at with the stock market and the current economy. There's a lot of fear, a lot of uncertainty surrounding tariffs, some of those other policy headlines. And while I don't expect Powell to really focus on that, economists and analysts have told me that he's really going to have to thread this stagflation needle. So if we start on the stag part of the equation, that's the health of the U.S. economy, he's going to have to really assure investors that, the hard data remains solid. We've seen some very disappointing soft economic data. That's things like surveys, sentiment indicators, manufacturing reports. He said before that really is not a good indicator when you think about consumption. So he's going to have to reiterate the confidence that the hard data, things like the unemployment rate, which remain at multi-decade lows, that is in a solid position. Now, on the inflation side of the equation, we have seen a deceleration in price growth when you think about producer inflation, consumer inflation, but there have been some sticky details under the surface that suggest it might be a little bit more difficult to reach that 2% inflation target. That's something that Powell is going to have to address. And that all of that in combination is going to feed through into the interest rate decision. Now, if we take a look at the December projections, the Fed is pricing in 2 rate cuts to come in 2025. Markets right now, they're thinking it's going to be more around 3 cuts due to some of those growth concerns. And then on the inflation and GDP side, in December, the Fed projected that core PCE will come in at 2.5% and that GDP will come in at 2.1%. Now, Goldman Sachs is saying that FOMC participants, they're likely to adjust a bit more cautiously until they have some more clarity around some of those tariff guidelines. But Goldman does expect that the Fed's 2025 medium economic projections for core PCE inflation to come in at 2.8% with the updated GDP growth forecast to 1.8%. So a difference of around 0.3 percentage points either way there. Again, that's a more cautious read. So it's really going to be interesting to see what Powell says and how FOMC members really lean. Are they going to be a little bit more hawkish, a little bit more dovish? And how does all the how do all the uncertainties surrounding this current economy feed into their thought process? So that's why the summary of economic projections is so important, and I'm really excited. I think it's going to be a very interesting estimate to come.
It's always our Christmas
like
day
the Super Bowl
when you get
here,
your Fed meeting. It's your Super Bowl,
yes.
right, Ali? Thank you so much for breaking that down. I know you'll be watching all of that today. Well, investors seeking reassurance from Fed Chair Jay Powell about the central bank's outlook. For more, we've got Ben Emons. He is FedWatch Advisor, CIO, Chief Market Strategist at Strategic Fortune Wealth. Ben, great to have you here. We've been talking about the stagflation narrative as the Fed is balancing supporting growth and curbing inflation. Where are rates headed?
Yeah, I think there's going to be on hold. That's clear. I think that's the message in the market too. But to your colleague, point, there is a difference still in expectations further out between the market and where the Fed is. So I do think there's a bit of a mark-to-market today in the dot plot. So I'm more on that, say, that would be the hawkish outcome of this meeting, as if they adjust those medians for 2026 a little bit higher, because I think it's the tariff impact. As Powell has mentioned, it's a one-time price shock, but they can't dub it like a transitory kind of price shock, because it's going to reverberate in the economy. Since they don't have real clarity on how it plays out, he calls it as a net effect of all these policies, because you're also going to get tax cuts and you're going to have more deregulation. Then how will that all offset one another? So I think the growth forecast is weaker as a result, and they have to keep that inflation forecast a bit higher, therefore keeping rates on hold and lifting a little bit the rate cut forecast a little bit further out in the future. So I call this, the Fed put, but call it the Fed trailing put, because you really keep the rate cuts out there as a put idea.
Right.
But at the same time, you can't really exercise this put now because of this potential shock to inflation.
What's the quantity? How many rate cuts are you anticipating we could still see with the reverberation of potential tariffs that could impact then the consumer mindset, also what costs would get passed on, and then additionally, of course, the negotiations in Capitol Hill of what the actual Tax Cuts and Jobs Act 2.0 would look like, but that would even be further off in the future for implementation.
Yeah, I think you have to think about it two ways. There's one, if you think of September of last year when they cut by 50 basis points, they did that to try to keep the unemployment rate not getting to 4.4%. And that they succeeded in that. Mm-hmm. So this next rate cut is partly driven by the unemployment rate. Because if this consumer sentiment is so poor and it leads to like lower spending and slower economy, you would think unemployment rate would go up, right? So part of the equation is that, cutting rates to keep unemployment rate down. At the same time, you have to deal with this inflation issue. So if the economy slows, the policy rate will become more and more restrictive, adjusted for inflation. But we also deal with inflation going up. So I think therefore the rate cuts, to summarize, the rate cuts will be probably more like 2 as opposed to 1 of 4 that we saw in last year as a series of 4.
At what point, and we've got about a minute left, but at what point does the softness in some of the data that we're seeing that isn't necessarily the Fed's preferred data, but is still showing economic slowing, become just too weak for the Fed to continue to ignore?
Yeah, they can't ignore that. I agree, Matt, because that has been in the past that way too. If you think of 2018-19, the first trade war, the Fed really quickly pivoted to try to get ahead of that issue of the economy materially slowing down. That's what Powell said in his previous speech on March 7th. This time may be a little different because we're still in a very strong economy. To Jensen Huang's point, $1 trillion of AI investment and all these data centers, that's a lot of money that comes in the economy, right? So I don't think they pivot so quickly to these rate cuts that they did in 2019 to react to the tariffs and the impact on the economy. Yeah. They can't ignore it, obviously, particularly because of unemployment.
Ben, thanks so much. Great to see you.
Great to see you. Thank you.
Everyone, coming up on Morning Brief, we count you down to the opening bell on Wall Street. Plus, we'll have more coverage on Nvidia and a look at the companies the chip giant announced partnerships with. And we reveal the final member of the Magnificent Seven to fall into the red this year. Well, there's the reveal. It's on your screen. And a longtime bull that's joining the selling. That is the big reveal. That's next on Morning Brief. Now time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. First up, we got to talk about Meta Platforms. Right now, it's higher pre-market, 0.4% after falling into negative territory for the year to date here. It's the last Magnificent Seven stock to give up year-to-date gains, and this comes after the tech giant saw a record winning streak, gaining for 20 straight sessions. Meanwhile, Cathie Wood's ARK Investment Management cut its stake in Meta for the first time in a year. And as we were looking at and really evaluating over recent weeks the relative performance of Meta versus the other Mag 7s, which you'll remember for Nvidia, for Apple even, they were leading some of those declines earlier on in the year and catching a lot of investor attention there. Plus, of course, it was only seemingly a matter of time before Tesla and some of the intertwinings that Elon Musk, CEO, has into the administration start to catch up with it. So all those things considered, for what we've been watching with Meta, what they've been touting in recent weeks is this being, in 2025, being the year, a pivotal year for the metaverse, as Mark Zuckerberg has called it. The jury's still out on that one. We have to see what kind of devices and whether or not there is this swift move from people into the metaverse and what type of monetization takes place. But we're still a long ways off from that being fully monetized. And in the meantime, though, they are doing a good job on retaining some of the advertisers as they move towards more of those AI features within Instagram, within Facebook native, and WhatsApp's growing out at a rapid clip too.
Yeah, I mean, I think the only thing I would mention super quickly, if we can pull that chart back up again, is the fact that Meta is the outperformer of the Mag 7 and Tesla is the biggest laggard. I think this actually paints a picture of the fact that the moves we're seeing in the Mag 7 don't have much to do with fundamental company changes, Tesla withstanding. You're just seeing pressure and potentially an unwind of this trade. There's nothing that has changed at Meta over the past quarter that is indicative of a huge slowdown to come for the company. Perhaps this is about those tech valuations getting a little bit out of hand, and therefore you're seeing a little bit of that selling coming in. I do want to go to Tesla, though. You can see the shares actually moving to the upside today after CEO Elon Musk sat down for an interview with Fox News' Sean Hannity. Musk addressing recent protests of the company, saying he was shocked by the alleged hatred and the fires of those Teslas. The stock has dropped for 8 straight weeks. Its worst weekly losing streak ever. I do quickly want to mention one potential catalyst that we are seeing this morning for Tesla here and why you are seeing the stock moving upward here. It's actually the biggest gainer of the Mag 7 today, bucking the recent trend. California permitting approval here for Tesla here. I just want to read this out. The EV maker granted approval in California to begin carrying passengers in its vehicles in a step toward ride-hailing services. You can see the stock moving to the upside off the back of this here. Analysts positive about these announcements, also positive about the announcements made in the Nvidia GTC conference on Tesla here as well.
Yeah, this is something that Tesla talked about being pivotal for this year in its most recent earnings call, mentioning that California and Texas were going to be the two major areas where they needed to see regulations move in their favor, not just for full self-driving, but for the cyber cabs to really be a thing, like Fetch is trying to be made a thing by Gretchen. All of these things and Mean Girls references aside, the major moving point from this juncture is how Tesla is able to sell these vehicles at a time where they're seeing brand pushback from consumers, as well as reduction of some of the EV tax credits as well. So those two things acting as major headwinds at this juncture. The opening bell is next on the Morning Brief. There you're taking a live look at the opening bell at the New York Stock Exchange, where HumanX is ringing the opening bell, and at NASDAQ in Midtown Manhattan, where you got a spin move, a couple Elmos, and one Minnie Mouse on the way into work. You've got Merit Medical ringing the opening bell at the NASDAQ, ticker symbol MMSI. All right, let's take a look at how things open up here on the trading day. The Dow Jones Industrial Average barely to the upside by about 0.2%. We'll call that right now. The S&P 500 fractionally higher by about 0.4%. However you want to round that off at home. We'll put this on a 3-day view just so you can see some of the activity that's transpired over the course of these past few trading sessions here. And the NASDAQ composite, as that calibrates here on our screen, you're seeing that open up higher by about 0.5% right now. This all going into that 2 p.m. decision from the FOMC. And then, of course, we're going to have the press conference at 2:30 p.m. Eastern Time. That meeting should be beginning shortly, and we will get an email from our own Jennifer Schonberger just to confirm once things kick off. Taking a look at the heat map here as we're focused in on cryptocurrencies. Why not here? Let's check in on Bitcoin since it's up here on the screen as of right now. You're seeing that up here on the day by about 1.8, 1.9%. All right, that's enough crypto for right now. Let's get back to the equities markets. Taking a look at the 11 S&P 500 sectors. Technology leading the charge. That's up 0.7%. However, pulling up the caboose, you've got XLP. That's your consumer staples. It's down by about 0.4%. We're relatively split, or as split as you could be. It actually looks like we've got one more laggard than leader as of right now. So we'll take a look at that technology and the technology trade right now for the NASDAQ 100 at least. Taking a look at Nvidia here. Of course, this is the big GTC energy week. You're seeing shares here today higher by about 2%. But if we were to actually take a look at that chart just to see how things have transpired over the course of the week as the conference plays out, we are still net lower by about 3%. At this juncture, you're also seeing some moves to the upside for Apple, from Microsoft, Amazon, and Alphabet, Google, whatever you're calling them, call them higher here as we begin the session. Meta, flat just barely to the upside. It's seeing some hyper waffling action out of the gate this morning. All right, for a deeper dive into today's early tape, let's get to Yahoo Finance's Jared Blickery for a look at what is moving. Hey, Jared.
Thank you, Brad. I'm going to start with the indices again, and I'm going to put a 4-day view on here, and that's because we are in the midst of a 4-day rally that really began last Friday, had this incredible breadth thrust that was Friday and Monday, and then yesterday we fell off a little bit. I think it's notable that the S&P 500 and the Dow climbed within just a little bit of their 200-day moving average, but now it looks like they've used it as resistance, and so that's kind of a different dynamic than using it as support. Nevertheless, there's a lot of focus today on the FOMC announcement, and all of this could just result in a trend change to the upside or a resumption to the downside. And that's what we've really seen as some short-term downside action. Here's the US dollar index. That is up about 0.4%. And we can see it has lifted off nicely from its lows there. Not really threatening the risk rally the way we've seen before, where sometimes you see some big movements contribute to that, but not today. Here's a 10-year T-note yield, only up 1 basis point. That's going to be another market that's in flux today ahead of the Fed, and really the bond market, the 10-year T-note yield, arguably more important than the S&P 500 and stocks this year. Here is the sector action, as Brad was just noting. We do have the mega cap sectors kind of leading here. We have consumer discretionary, which has been hammered recently because of Amazon and Tesla mainly, and then tech. Those are the two up top here. But let's take a look at what's been working in this 4-day rally. Interestingly, energy is taking the top spot. That is up 5%. Then you have financials and real estate, then tech, then industrials and materials. It's a pretty broad swath. And as I noted before, Friday and Monday had incredible breadth and participation to the upside in those moves. So let's take a look now at some of the mega caps, and this is a 4-day look as well. You can see the mega caps are split. You got some winners and some losers there. We're going to focus on today once more, and here we see Tesla up 3.8%, Apple up 1%, Nvidia up more than 1.5%. So some of these guys moving in the right direction. Tesla simply consolidating near recent lows. Here's the 1-year chart, and what happens here could be important for Tesla. So we'll see what happens, if anything, into the close today. Fed decisions affect everybody. And I'm going to close on the futures market, where we have some interesting action in both precious metals and industrial metals. And let's tackle precious metals first. I'm looking for GC equals F. It is down fractionally right now. This is a 1-year chart of 40%, but I'm going to look at the intraday overnight action, and you can see we actually hit a new high up here. We got above 3,050 for the first time, selling off a little bit, but gold has been in a very steady uptrend all year long, still sitting on gains of about 14%. I will close with copper. Copper is up 78 basis points today, and this is nearing a record high. This is a year to date. Let me put the 1-year chart in so you can see the levels that we're dealing with in the past. Once it clears this, we are looking at the highest copper prices in at least 25 years. Huge implications for risk markets and the economics, and especially when you consider input prices. So again, future is really something kind of not on people's radar, but it's catching my attention.
All right, Jared, thanks so much for breaking that down for us this morning. Let's get a check in on shares of Nvidia at the open. Moving to the upside today, despite that tepid reaction after CEO Jensen Huang's keynote address. Turning the Magnificent Seven trade overall here, the stocks seeing their worst start to the year in 2 years, with all members officially in negative territory as Meta becomes the latest to drop into the red for the year. Joining us now to break down what this means for the broader market, we've got Josh Schaefer, our markets reporter. Josh, the big question, can the market recover without the Mag 7 recovering?
I think most people would argue probably not, Maddie, right? So you take a look at how the Mag 7 has done versus the S&P 500 this year. It's lagging the S&P 500 by its most since late 2022. Of course, that was the end of the last bear market, right? That was really a large cap tech sell-off. And I think the equation here, the struggle is, we've talked a lot about how these 7 companies are so much of the index. There's so much of the index. When you look at it right now, there's still a lot of the index, right? These 7 companies still make up almost 31% of the S&P 500's market cap, essentially saying where these companies move, whether it's up or down, is going to kind of give you the direction of the market. And that's really the action we've seen over the past month, right? The Mag 7 have fallen significantly this year, I think down about 14% in aggregate as an index. That's more than the S&P 500, right? So what that's telling you is that index is dragging it down. Even if you look at something like the S&P 500 equal weight, which does not get as influenced by the market cap size, right? That equal weights all of the stocks. That index is only down about 4% over the last month compared to the S&P 500's 8% drop. So essentially what I'm saying is not everything isn't working in this drawdown. What's not working is large cap tech, and at some point that weighs on the index. So if you really want to see a full rebound here, you don't need them to lead, but you're going to need a little bit of participation.
And so what are investors apt to do right now? Because I got this note that just hit my inbox from UBS saying that they would be apt, investors should consider buying the dip in quality AI stocks here. Does it seem like, even if some of those AI plays don't lead, that they still have to have a concerted move in order for the rest of the market to really be able to be a beneficiary?
Yeah, I mean, I think so, Brad, right? You look at those names, a lot of those names that we're talking about here, whether it be in Amazon, Nvidia was down even more than Amazon, but we'll put Amazon, Microsoft in a similar box, Meta, I believe as well, all off about 20% from their recent 52-week high, right? So most of them, that's their all-time high. And so you look at stocks that take that big of a shave, and the question is, well, we've been pricing in pretty strong earnings growth for these companies. What if they continue to accelerate that earnings growth, right? It has been a beat and raise environment. It's been a slowing beat and raise environment, which has been the market's problem, that expectations have started to catch up with where these companies are. But there's certainly a case that you could make that perhaps maybe we've re-rated them too low, and there's a little bit of a buying opportunity there. But to your point, Citi Scott Croner told me he still thinks some of these stocks are defensive. Because if you're going into any kind of economic slowdown, any kind of concerns about the broader environment, where has the earnings growth been pretty consistent? It's large cap tech, right? These companies have real earnings. They consistently post profits. They do share buybacks. Most of them have dividends. And so that's a place where you can maybe go to hide isn't necessarily the pure advice, but it's a little bit defensive, right? Because again, that's where the consistent growth has been for several years now. When we talk about the rest of the market, we're talking about hopeful growth, right? We're hoping that these 493 continue to accelerate earnings growth, but that's just in estimates right now. We haven't necessarily seen that.
And Josh, we have about a minute left, but how does the Fed play into this conversation? If we do hear a dovish Fed today, does that provide a lift to all ships in the market boat right now?
Yeah, it seems like it, right? And to that point, Maddie, I wouldn't be surprised if you see large cap tech lead, right? We've seen that off some Fed meetings where the stock market in general is rallying, but what's rallying the most? It's Nvidia, right? And so it seems like when you get a risk-on sentiment, especially when you think about, again, Nvidia is not, it's not the Apple of 10 years ago when we would talk about Apple all day long and that was the market leader and perhaps a little bit more of a quote-unquote boring stock. Nvidia can have a big day, right? And so if you start to see risk on, maybe that's the kind of name that people start to pile back into because again, that is a popular retail name. Yeah. That is a name that moves a lot and has a lot of different options tied to it, different things like that. So it'll be interesting to see if we get any sort of risk on rally today or to the downside, the risk off rally. Does tech continue to lead? Because it led the market up for the last 2 years. It's been leading the market down thus far this year.
Josh, thanks so much. We're going to be watching closely.
2:30, Brad.
A lot of price action around that.
Wait.
Yeah. Coming up, everyone, 6G, self-driving cars, and robots. We're breaking down Nvidia CEO Jensen Huang's big plans for the future of AI. That's next. During its GTC event, Nvidia's Jensen Huang touted the next wave of AI robots.
Time has come for robots. Robots have the benefit of being able to interact with the physical world and do things that otherwise digital information cannot. Physical AI and robotics are moving so fast. Everybody pay attention to this space. This could very well likely be the largest industry of all.
Joining us now to discuss the next wave of AI, we've got Bob O'Donnell, Technalysis Research President. Great to have you here with us, Bob. I just want to get your reaction to the keynote from Jensen Huang.
Sure, Brad. I mean, what we saw yesterday on display was all sides of Jensen's personality. We saw Jensen, the professor, describing in great detail what's going on. We saw Jensen, the pitch man, pitching the latest generation of their GPUs. And then we saw Jensen, sort of the industry leader, where he's talking about where some of this stuff is going. The problem was it was a little biased or a little overbalanced on the very deep technical explanation for a long time. And it took a while to get to the heart of the matter for a lot of folks. But look, at the end of the day, he told a compelling story about how AI is going to be deployed in lots of different industries, all the different software that NVIDIA is working on. And we don't always talk about NVIDIA software, but that was a big deal. And also the fact that, despite the concerns that were raised with DeepSeek a while back, in point of fact, you're going to need even more compute, and they develop more software to do these chain of thought and reasoning type models like DeepSeek, and explained how that actually drives even more GPU capacity demands. And so I think he set himself up for, a pretty good story for the next couple of years.
So it's a pretty good story, but investors weren't necessarily literally buying it, at least yesterday. We've got a little bit of a lift in Nvidia stock this morning. For investors who like the AI story, where is the biggest opportunity right now? Is it with the giant itself, Nvidia, or is it with some of the logos that we saw flashed on the screen at the conference yesterday, the likes of GM, Cisco, other names?
Yeah, no, it's a great question, Maddie. And, I think part of the market's reaction is hard to know for sure, but there really weren't any big surprises, right? I mean, the robotics stuff, Jensen talked a lot about at CES. They've talked about autonomous cars in the past in deals with companies like GM. And the GPU roadmap, a lot of that had already been, leaked, or people were aware of what was going on. So I think part of the problem was there was nothing really brand new. And so I think that's some of the issue. But to your point, one of the interesting things I saw from this GTC that I think is different than others is there was a lot more sense of these partnership deals. So you mentioned Cisco. So they're working with Cisco on being able to leverage some of Cisco's silicon in these Nvidia switches for GPUs so that companies can work with both. They've got software to make the management of this better. You've got companies like Cadence doing digital design. Cadence got a lot of love on stage as well, from doing data center digital twins and that whole idea of creating other types of capabilities. So I think what Nvidia is trying to do, what Jensen was trying to do, is point out, look, all these different companies we're working with, and all the things they're doing are helping build this overall AI ecosystem, because I think they recognize they need to have, they're more powerful, frankly, and have longer term value if they're a critical part of all these different components. And I think that's going to be important moving forward.
You know, it's so interesting, Bob, too, as we think about some of the announcements that were made. Investors are continuing to try and look out to the future and figure out what that next big thing is beyond just AI that Nvidia can be the poster child of. And it seems like they're trying to position their own little bit of gatekeeping around quantum. Are investors impressed with what they're hearing? What more should they be listening for from that entire landscape, as Nvidia did have its own kind of quantum focus as part of the broader conference?
Yeah, and actually tomorrow in particular, they're doing a whole quantum day that I'll also be at. So it's going to be interesting to see. I will hold off on what for sure they're going to say, because I think tomorrow we'll probably get some news on that front. But look, Jensen just recently said, "Hey, quantum is still several years out," and I don't think he's actually wrong. I think it's still a several year thing before we see a big impact. But what we saw, a number of smaller but I think ultimately important things. So for example, Nvidia talked about silicon photonics, an optical networking technology that has been discussed for like 15 years. Now they're finally making happen. They're talking about going into working with the storage companies. So lining up all the pieces of the compute architecture. Obviously, autonomous cars has been around for a while, but hasn't really played out the big way we've expected. And I do think he's not wrong in saying that robotics is going to be a big deal. So I think we're going to see more on the robotics side. Initially, of course, it'll be industrial, and eventually, there'll be these kind of consumer robots, the humanoid robots that get people kind of excited and interested. But most of these are several years out, Brad. So I think, right now it's a lot of blocking and tackling on what they're able to do within their own controlled world, that is the computing world, and then, branching off to these other areas.
Bob, I've got 30 seconds here for a big one. I want to know if China is becoming the more dominant tech market than the U.S. with the announcements we've seen from BYD, from DeepSeek. 30 seconds left. What should investors be thinking about China tech right now?
It's a great question, Maddie. I don't think China is becoming a leader, but I think clearly they've come out of the doldrums where they felt they were way behind and now feel like they can play on relatively equal areas. The thing is, the China market is very different. Autonomous cars like BYD are much bigger there than they are in the US. So I think we're going to see a diversification. The concern is if each market, that is US, Western Europe, and then China, each develop different technology standards, that could hurt everybody in the long run. And that is a big picture concern I think we have to think about down the road.
All right, a great risk for our investors to be looking out for. Bob, thank you so much as always. Appreciate it.
Thanks, Manny.
Coming up, a closer look at General Mills' fiscal third quarter results when Morning Brief comes back.
Shares of General Mills sliding after reporting third quarter earnings. Here with some of the breakdown, we've got Yahoo Finance senior reporter Brooke DePalma. All right, what's up with this share price reaction? What is the street not impressed by?
Yeah, certainly negative sentiment here based upon the fact that General Mills said that the consumer is not improving as we make way into the year. Now, keep in mind, this is their fiscal third quarter, and so they're already 3 quarters into the year so far, but they said that shoppers are still hyper-focused on value and those essentials. And that's what really led the company to cut their outlook for 2025 more than what the street had expected. The company now expects organic net sales to come in at the end of the year down 1.5% to down 2%. Now that's compared to the previous expectation of the lower end of the range of between flat and up 1%. And what's really driving that is this snacking slowdown that we're seeing among consumers, particularly here in the U.S. That led volume growth for North America retail to fall 5% in the quarter. And consumers are pulling back on all the snacking things, snack bars, fruit snacks, and salty snacks. Keep in mind, General Mills owns the brands Nature Value, Annie's, as well as those Gushers. And so consumers aren't going to those discretionary goods. The company did say that they plan to leverage brand partnerships, working with retailers on promotions. They also plan to lean into value, pack sizes, and addressing key price gaps to get consumers to come back in. Also, keep in mind, innovation and newness, a key part of that tactic to get consumers to come back in. Innovation not as high as what we were, or the cadence of innovation not as high as what we were pre-pandemic. Also, away from home sales, industry sales, those also lagged in the quarter, particularly driven down lower by the use of flour. So food industry, not as many consumers going out to eat perhaps, and that's really coming in respect of away from home industry sales lagging in the quarter. Now, it's important to note this is not something new that we've heard from a CPG giant. Conagra Brands, Campbell's, Kraft Heinz also reporting this slowdown among consumers that's causing them to warn of a perhaps impact on their profits in this coming year. And something else that's interesting for the industry is this heat that they're under for those comments from RFK Jr. about creating this healthier America in general. And so a question was asked on the call, and while food dye was not mentioned, that is a key critic of the current administration, this idea of upping protein options was mentioned, and they said that their Cheerio protein option is performing well right now.
How much could the focus on red dye number 3, obviously used in a lot of the products that you mentioned, the likes of Lucky Charms, for example, how much could the administration's focus on cracking down on the use of red dye number 3 impact a company like General Mills?
Well, think about it. General Mills, not just those Lucky Charms, they also own fruit roll-ups, they also own these Gushers. And so perhaps as they look into this fixation on this sort of red dye, it is only a small part when you think about their nearly 100 brands within the portfolio, but certainly something that's weighing on top mind as they really have to navigate this environment that's different from the previous slowdown that perhaps we've seen back in 2008 when there was that recession, where consumers are more fixated on this idea of healthier options and protein options. And so certainly it's weighing on their minds as far as the exact impact this could have in order to reformulate perhaps remains to be seen.
All right, Brooke, thank you so much for joining us this morning. Break that down. We appreciate it. Real quick, going to do a check on the markets here. You've got stocks continuing to move to the upside here. Your S&P 500 up 0.6%. Your tech-heavy NASDAQ up 0.8%. I should mention IT, your tech names, the biggest gainer. The S&P 500 today, Apple and Nvidia taking the reins as the biggest gainers in the trade so far today, seeing a bit of a recovery in those tech names after a little bit of a sell-off that we've seen over the past 24 hours taking shape. The big question, can the market recover without the tech names? And what will the Fed do to that recovery? We'll be monitoring all of the headlines to come from that Federal Reserve meeting at 2 p.m. today. But for now, that's going to do it for the morning brief. Join me next hour for more analysis on Catalyst and Brad for Wealth after that. Stick around.